The market getting slammed again today. The Nasdaq officially in correction territory, off 10% from its all-time high hit just last week. It fell more than 4%. Meantime, the S&P 500 posted its first three-day losing streak since June, and the Dow fell more than 600 points. Our next guest warns there's more pain ahead. Jim Bianco is the president of Bianco Research. Jim, great to have you with us.
Thanks for having me.
We were talking about the power of the Fed, and you have been a huge advocate of that argument that the liquidity pumped into the system by the Fed is one reason why you want to just buy stocks at this point. So in terms of the weighting and importance of that argument now, does no stimulus package, no coronavirus vaccine, and high valuations, is that all, does that trump the Fed liquidity? Has the script been flipped?
Yeah, we're going to find out. You're right. The AstraZeneca news that we finally had a stumble with the race for a vaccine, and you throw in the high valuation, the forward PE ratio, which is Wall Street's favorite metric, already took out the 2000 peak. And if you look at the excessive speculation that you've had in the options market over the last month or so, with 75% of options trading with less than 2 weeks to maturity, and the vast majority of it being retail traders. And I might add, here's a fun fact for you. Last Wednesday's all-time high of 3580 on the S&P came with the highest VIX in history for an all-time high at 2657. So that was showing you that the options market was out of line. All of this is bad news. All of this should get one really bearish, but I'm only looking for a correction because on the other side of the equation, you have Jay Powell and his printing press. Now, some point that's going to fail, but I'm not so sure that's going to fail this time, and it ain't going to go down without a fight. And so, yeah, 7% is not going to get them in, but if this correction keeps going, they're going to start throwing kitchen sinks at the market again, just like they did in March.
Wait a minute.
Yeah.
Are you saying that Jay Powell is going to be basically the plunge protection team if the market goes down anymore?
Was he not in March, the plunge protection team, when the market went down? So you have to open that up. He's already buying ETFs. He's already buying corporate bonds. He's already said that financial stability is kind of a third mandate for the Federal Reserve. They've already lined all that up already. Now, 7% isn't going to get them in, but if we go down 10, 15%, I suspect that will be the conversation. And then the conversation will be, will it work again? Seemed to, when they did enough of it in March, it worked at that point. But we'll have to see. But yeah, that's what you're going to have to fight against, even though all that other stuff seems to be nominally negative for the market.
But let's be clear, buying stocks is not within the Fed mandate as it stands right now. That would require an act of Congress. And so you're saying that everything surrounding that could be done by the Fed. And so therefore, Jay Powell's got your back, investors.
Buying corporate bonds, buying ETFs needed an act of Congress, but they found a way around that with these special purpose vehicles through the Treasury. But before they even get there, they can start in with yield curve control, which is price fixing in the interest rate markets. They could step up their purchases of corporate bonds or ETFs. There's a lot of other things they could do under the mandate that they're concerned about financial stability. What I'm saying is you got high valuation, you've got wild speculation in the options market, you've lost or at least had a stumble in the race for a vaccine. All that's negative. You should be looking for a big correction, but the offset to that is going to be the Federal Reserve.
Jim, always good to get your thoughts. Thank you. Jim Bianco, Bianco Research. Karen Feinerman, you know, the Fed, when it said it's going to buy corporate bonds, it really hasn't bought too much. And it was the power of just actually saying that they were going to buy. Do we have Karen? I think we've lost Karen. So I'll switch gears and ask this question to Guy. It was the power of the Fed just saying that it would buy corporate bonds that actually helped the market. So there could be a lot of job. I mean, the plunge protection sounds very dramatic, but it could just exist in just sort of verbal plunge protection.
Yeah, and it's worked in the past, to your point. I mean, they say they're going to be there, which puts in a floor, and the market gets all geeked up. But I think, again, you're going to get to the point of diminishing marginal returns in terms of Fed speak, and I think we're dangerously close. And I think that's sort of what Jim is saying as well.